All right, good evening, guys. Sunday night strategy podcast for January 3rd, 2021. My favorite line of the week has been, if you thought 2020 was bad, wait till 2021, now that it is licensed to drink. I want to share some notes before we get started. We had a good debriefing with Dr. Morrison with the Forex group. And they got a good thing going on here. This is the results of their trading. So they're doing a combination of, they have the standalone home study course, and they're getting together every week to apply that in a structured collaborative learning group. So it's really translated into an operation. So it's not just study the course and then good luck to you. It really is the guys have put together a weekly collaborative learning group, and they're just getting it done. So it's really plans and operations. It's training and operations. And so I ordered him to raise the price of the course to cover the infrastructure costs and to respect the work that those guys are doing. So I've raised the price on the Forex to $3,000 to take the initial course, and that will give you a year of the learning environment, and then afterwards a maintenance fee of $1,000 in the second year and beyond, just to fund the infrastructure, so I can get those guys off of my back. So this is pretty impressive. The averaging of $166 for $1,000 risk gives you this kind of stable average trade. That's pretty good. This scatter plot shows you that they've done a very good job of managing the risk on the downside. Only a handful of trades, less than 5 out of 1,400 trades that have gone below the $1,000 1R loss. A very stable performance through time here with the periodic really excellent gains. That gives you this kind of equity curve. And if that's not the kind of equity curve you want, then I'm not really sure what you're looking for. So the biggest gain, biggest loss, this is the average winning trade, average losing trade, and that's the win rate. So it's a coin flip that pays 2.5 to 1. So how many times a year do you want to trade that, or how many times a day do you want to trade that? Coin flip that pays 2.5 to 1. And because of the large square root of n, you get a large system quality number. But that should tell you something right there. They do a once a week strategy call. So I included the detailed annual report in the posting on Patreon. Yeah, Eugene points out that's a scary SQN. I believe that's coming from having such a large n. So when you compute the system quality number, you're taking the square root of n. You take the average gain divided by the it's square root of n times the average gain divided by the system quality number. So you get a really large SQN when you have a lot of n. So that would be like 20. Is it 25? Yeah, square root of 1,400 trying to remember what the square root of 10,000 would be, or square root of 1,000, square root of 10 times square root of 100. So it's like 3 times 30. Yeah, so it's giving you a 30 instead of normalized for 10. So if you normalize this across 100 trades, this would be an SQN of about 3.2. Yeah, good question on that. So, but then when you look at the equity curve, what you realize is that this is a steady production machine. So what you'd want to do is break this into 100 trade segments and then track the SQN on a rolling 100 trade basis, and that would come in about 3.2, 3.3, just on the basis of these numbers here. Okay. All right. So yeah, SQN about 3. I'm going to say 3.3. So a very stable trading platform. This is the one-page summary of what they're doing, and it's the basis of how that weekly working group performs. I'm going to that's in the report, so I'm not going to drill through this, but I think these are some important points. This one is the power of the midweek review and the networking in the community of practice. Not holding Forex trades over the weekend. So they trade 24/6, not 24/7. Stops and targets. Finding efficient time usage. You know, when you're a human in the world and you're trying to be efficient in the use of time and life goals. Roughly 20 minutes to close and set up trades at 11 o'clock, daily. Finding efficient times in the evening, 11 p.m. Central, to reduce slippage. They're trading a variety of markets, so they're getting market and news diversification. Maybe the biggest help I've given them was with the ruthless risk management and the use of SQNs. By applying SQNs to the actual currencies, you get some interesting ideas about which ones to target. Using strong technical definitions based on probabilities to frame their trades, using our RLCO Bollinger Band framework to find exceptional versus normal moves. They're using Heikin-Ashi candles in order to smooth out the appearance of the price candles. That it doesn't take a lot of information at turning points to get started well with Forex trades. The flexibility of Forex allowing you to scale to your level of risk. This year for 2021, we're looking at adding silver, gold, North and South Korea, and also I've asked them to take a look at Bitcoin. And then the idea of what to do with exceptional gains, catastrophic wins, and then learning how to let the market settle after a really good win, and then what they're finding is that the Chinese yuan, Hong Kong dollar, and Mexico peso are being moved around by a lot of other external news events so much that it's not profitable to trade them in a simple way. So the entire report's available on Patreon for you to take a look at what they're doing. To protect their intellectual property, I went ahead and redacted the rules. It's about 5 sentences, to be honest. And to me, the technique is in the it's sort of like if you were going to learn how to whittle, the first rule would be don't cut your thumb off. Second rule, don't cut the other fingers, but really the thumb is the important one. And so they're taking a very robust and simple approach and systematic approach to this, and the framework is what really sets it up. So I can strongly recommend that to you. And again, that's their documented equity curve for this year of COVID. I also did a summary of my my after action review with him, where I really was exploring the ideas of let's see, focus, alignment, and I think it was resilience. Those three words were important, I think, from this year. First of all, the focus. There's so much going on that necking it down just to the things you need to know in order to be able to be effective, I thought was important. Alignment, so that we keep our eyes on the prize, and that all the things that you're doing for daily, weekly, monthly effort is in alignment with who you are as a person and what you're aiming to do. And then the resilience, just to keep going. I mean, Jimmy, it's this has been a tough year in a lot of ways, and maintaining the emotional bank account to keep going really does represent a significant challenge in my view. It's something that you should attend to, not just hope that it works out okay. And I see Betty here tonight, and that's something that she and I were talking about this weekend on our weekly true storytelling group. We were talking about emotional resilience and where does that come from? And I talked a little bit about that on some of the trading lessons this weekend. I've posted the links to a number of what I think are foundational ideas going into 2021, and I would encourage you to take a listen to those. I think it kind of goes beyond just the bar by bar review, but some of the foundational personal and psychological elements of trading. So I can recommend that stuff too. I also put a sample of the weekend advanced swing trading working group. So a bunch of guys that I've been working with for the last 10 years or so. We're getting together now on Saturdays to kick around one good idea from each person and talk about, what's going on this week and what we're seeing. And it's a very refreshing, multiple points of view, but sharing a common frame of reference about collaborative learning and evaluating and framing trades, and talking about risk management and the different ways these guys are working through the ideas. And I think it's a useful video to listen to. It took about 50 minutes. And the point I want to make is the point that I made in the chat room today. There was a question from Chi Wing Chong. Are you here tonight? No, please listen. I'll listen to this later. But he was asking about this. And his question to me was, hey, I only use these markups from the daily trade frame as key price levels to guide his intraday trading. And that's certainly one of the ways that you can profitably use swing trading frames. And his question was, are we supposed to enter them as swing positions, which will be closed before the end of day, or kept overnight with a fifth of the position if the trend is good? Also, do the second and third positions have the same position sizing as the first position, or do we need to recalculate based on the original stop, etc.? My short answer to him was this. There's not just one way to trade these swing patterns that we're looking at. And in fact, that's what the swing course actually teaches, because swing trading is much more flexible than the way we might approach day trading. In day trading, I think it's very much ritualistic and standardized with the Kata 1 and 2 and the hybrid frog and the chain and where I add, and it's standard position sizing every time. And it's increment in and all out. Well, swing trading there's more time for reflection and personalization and adaptation. And so in my view, there's not one simple answer for this. And one of the things that you would notice if you listen to the advanced swing group's work from Saturday morning is we're all using similar patterns and standard language, but the way we're approaching the targets and the way we're shaping swing trading as part of our total portfolio really does vary person to person. Some of us are using swings as a standalone system, some as a standalone strategy, some as hedging against core positions, some as a way to feed forward into day trading, some that are using a very strict combination of swing and day trading on hourly charts or 65-minute charts. So I believe there's as many ways to swing trade these patterns as there are people, times 3, because you could use multiple strategies yourself. So I'm reluctant to give a simplified answer to that, other than to say that the swing trading course describes many different ways in which these patterns, systems, and strategies can be applied. And the hybrid course itself is about how to go the next leg, and that is how to mix and blend day trading and swing trading in some sensible way that is geared towards your situation. And so I would say individual circumstances, skills, objectives, strengths and weaknesses, all of those make the answer to that question a personalized one. And there's not one easy, one size fits all, except for getting started with whether it's the mechanical systems are very clear on how to apply it in one way. And then the strategies can be reduced to a single page worth of effort, like the, kata number 1 applied to swing trading. That's half a page of instructions at most. I think it can be a paragraph. But every person, I think, has to take that on for themselves and do the final 20% of the work, which is tailoring it to your own circumstances. And so that's why I'm reluctant to get a more simplified answer than that. And much of what I'm teaching is how to adapt things to your own circumstances, and how to find your strengths and weaknesses, and then learn to integrate these. I think that's the final fitting of the clothing is for you to adjust and adapt. I think of this almost like a rucksack in the Army. When everybody gets issued a standard rucksack, but everybody's body shape is different. Everybody's stride is different. The way their frame is different, and so we adjust and adapt the gear until it fits each and every person in a way that is comfortable to them. So there's a lot of little adjustment points that allow you to tailor the systems to your own circumstances. So, and that's what a lot of the the collaboration working groups come up with, is as people start describing the different ways they're making adaptations, it really does resonate with people. And so we're finding out that that's a good way to start with the 80% solution from the systems and strategies and the approaches, and then the final 20% of adjustment to account for your individual condition. And as an example, you can see what the Forex guys are doing. So that's what I wanted to say about that. Let's get started with the trade frames then. All right, so this is nice work here. We've got an integrated view of weekly, daily, and hourly. Yeah. I'm really attracted to this right away. And what I'm marking off for myself are those areas of support and resistance that I know are going to be of interest. There's the RL270 rolling over, the 200 period moving average rolling over. You see the strong downward slope in Walmart. This was the width of the dragon at the last turning point, so I really take that as a broad, wide support level. Here's another one. That's the belly of the RL10. The size of this move, what goes up must come down, and also what goes down must go up, maybe. So here's the move down. So all we're doing is looking at that parallel construction on the daily. And on a weekly basis, Walmart has been strong, but has had these periodic pullbacks. And in every case, that was followed by a strong upward move to the next level. So the hypothesis is this. Thinking 152 from the weekly looks like a strong support. This 143 looks like a strong support level in here, and that's what we're seeing here. This would be a natural and normal place. And so, yeah, I like the picture of if it breaks out of here, it's beginning to walk up that stack, walk up the trail of tiers. It certainly has to get through this support level, or that resistance level, I should say, about 145.25. Now what I'm doing is I'm drawing lines from the hump of the dragon, because those were the statistically significant turning points. Each and every one of those, to me, looks like you could think about adding a second, another position, so maybe a third position here, fourth position if it gets above here, 5 positions here. Yeah. Now, this isn't framed to the downside. I really think, though, that's legit going into the new year. So if this were to break, those are the price levels to the downside. So if this breaks on a daily, then the belly of the next dragon is a downside target. Yeah, I'd even put this one in as an intermediate. So I think there's some downside availability. The question would be whether or not you want to short Walmart, or would it be better to look at shorting the Dow with something like SDow and try to take a quick shot, a quick short on SDow and get the broader weakness. Like, I don't think you'd want to, if the Dow and the S&P were up, if those were up, I don't think you'd want to be trying to short Walmart at the same time. Or if you did, it would probably be short-term targets like that, trying to get this and that one. I think like SDow would probably be a better way to try to get that, or maybe TZA with the Russell 2000, even though Walmart's a large cap. I just think that we've seen, like, if you were going to be shorting Walmart, you should have been in here on this collapsing dragon, bang, collapsing dragon. But the size of those moves after the collapsing dragon, even on the hourly charts, to me suggests that you could actually do this on an hourly basis. So, I think Walmart is in a wonderful critical position on weekly, daily, and hourly. So this is, I think, a perfect way to start with hybrid trading and to think about a short position in Walmart. I think is justified, and that you would start simply with a position that was built on hourly, and if it closed weekly, I would keep 1/5, and then start managing the position based on these places to add, or at least confirmations to lock in profits. And then if that would work, you could just continue to monitor this and let it grow to be a weekly. Because when this does get weak on a weekly basis, you'll notice in that entire move up, there was the last 4 moves down, there were not runaway weeks, but there was steady selling pressure. So we haven't seen one where it pulled back and then took a second leg down. So we've seen this leg down. This would actually be an interesting point, that if this did continue to collapse here, that might be a signal of a broader rejection of this powerful move up, which has coincided with the powerful move up in the U.S. market too. So Walmart might be one of those key indicators of larger turning points in markets. So I could see this starting as an hourly, and I would have to earn enough money on the hourly to justify keeping a short position. But I like the idea. So I think good work on that one. I wanted to just share this one. I talked about this one yesterday, but this was from the chat room, and I forgot to record that one, so I wanted to just get this added. This was an intraday trade in Western Digital, and I thought it was really well done, and I wanted to get it on record. Yeah. So this was, the previous day was a very tight compression, then a nice gap up of more than a frog box, missed the morning move. Here's leg 1, leg 2, leg 3 of the morning move, and that actually becomes leg 1, leg 2, leg 3, and really after this breakout, leg 4. And so what the trader got was a nice Z3 pinch breakout after what was already a good morning move, and he had a very tight risk box, and then quickly got his risk to no lose plus dinner for 2. Well done. Might have added here on the PSAR flip, might have added here on the PSAR flip. So those are potential CATA 2 additions. This is a terrific exit using the manager's exit for 3 position sizing risks. Here was an opportunity, at the lunchtime to play the continuation. So what a perfect illustration of how to trade that morning session. So this is the opening move, 30 to 45 minutes. This is that segment before lunch. And this was guys coming in at lunchtime saying, oh yeah, I want some of that. So very nicely done. Carefully managed risk and a beautiful exit with an opportunity to have earned a little bit more. Just notice how, the confirmation of the RL270. By the time this finishes, this long move has now come back to the RL270. So this is what a super pinch looks like as it leaves the station. Now you can see the 10 and the 30 are just chugging along. The 90 is the green line, and that starts moving up. And then the 270 really tells you when that move is over. And then up in here, you'd probably see it starting to roll over. So the RL270 gives some interesting confirmation. So nice work. All right, so here's Alcoa on a weekly. You'll see a deeper discussion of Alcoa from the swing trade, the advanced swing trade group. We talked about this one extensively. Yeah, so Alcoa is finishing up a nice weekly consolidation zone here, where it's a nice sideways quiet channel. And on a weekly basis, has identified some good breakouts to the upside. And when this thing does collapse, it does move in an orderly fashion on swings like the rest of the basic materials. This is that strong move that all of the XLB, the SLX, US Steel, Nucor Steel, Cliff Natural Resources, that whole cluster had this feature, and they've all kind of sideways. And so this would be the next leg up, is what we're looking for, but with some real possibilities for the breakdown. And I like, let's see, so this breakout is really just following through a breakout of the daily high. You would see that the RL10 is getting ready to break through the the PSAR. So this is going to be a PSAR flip, and this is where that PSAR would flip to. So the upper target of the RL10 is where he's looking to add a second position. A third one would be, looks like a breakout of Z1, and then a Z3 or Z2, I should say, and then a Z3 excursion here. And you can see that when Alcoa moves, it moves in long, orderly ocean waves. This was the argument for why you should care about Z3Ps. By the way, you see that nice compression and that long sideways quiet channel. Now these breakouts get very powerful. And now notice that nice swinging motion of the PSAR. And now it's had 10 days where it really didn't fail much. Not much failure at all. Now it's getting ready for the next leg up. And we talked a little bit more about that on the weekend report, but that's a good thing. All right, so here's the daily and weekly on Caterpillar. Just trying to get this thing sized. Sorry, stand by. All right, so on a weekly basis, Caterpillar has also gotten that nice quiet channel, and much like Alcoa, there's an argument in both ways. And again, Caterpillar, when it swings on the weekly, is really strong. And it did have, two lower lows on the weekly, which is why, we are concerned about possible retracements after such a nice long move. And when Caterpillar corrects, it can give you these short, sharp moves, and that makes it interesting as a short-term swing trade. That was a move from like 173 down to 153, so that's minus 20 on 170, so it's about a minus 12%. And so you can make money on that one on the short side swing. And then when that swing rolls over, obviously, you like the RLXD, which gives you all of that. This is failure to fail. So it had an opportunity here, here, and here, and it never really failed much below the Bollinger Band mean. So this is justified as a support level. At the same time, it has not broken out above that key level at about 182. So now the fact that it has failed to fail, and now a resumption of the trend makes you think like, yeah, it could be one of these. And if the Dow is good, and it looks good in the overnight session, and the S&P is up pre-market and in Asia, then Caterpillar should benefit from that whole XLB, XLI strength of industrials and basic materials, and great American company. So I like the trade frame. That's in good shape, suffice it to say. Honeywell, this is the same pattern, so I'm not going to dwell much on it. So Honeywell, CAT, and Alcoa are kind of in that same industrial America piece, and this is a standard weekly consolidation, critical state, ready to go in either direction. It's only had one spike low, and there was no follow through on the downside. It's now caught up to the PSAR flip here and is ready to go. You've got the RL10 bellied out at the Bollinger Band mean and ready to go up. So I like 1, 2, and 3, and then it's free and clear, and off it should go. It's been one of the strongest stocks in the Dow, and this is just a stable function right here. So I like it to the upside. I think there's better candidates on the downside for shorting, but if you wanted to specialize in Honeywell, I think you could take that under advisement. And really, it would be a tactical short until it gets out of that weekly dragon. I wouldn't think about a long-term swing short on Honeywell until it goes below here. But I'll tell you what, of all the companies in the world that I would not want to be short long-term, it's Honeywell, because they are a great managed company with targeted technology and a stream of earnings and proven themselves over decades. That's how you run a company. And so I don't want to be on the short side of them for too long. I just think that if there was any urge to take tactical advantage of a short, there's 30 days where it could have, and nobody is interested in that. And every weakness has been repurchased. So I like the upside. I'd look for better targets on the downside. Cliff Natural Resources. This is the hour. Okay, this is almost looks like Jerome's kind of work. So this is a 65-minute chart. Oops. Actually, I have to take this snapshot here. So Cliff Natural Resources is a smaller mid-cap steel company who sells, equipment to steel makers. Here's a 65-minute chart, a daily and a weekly. And you see it, Cliff, after a nice run up, much like Alcoa, it had come out of this sideways and then a nice breakout from a Z3 pinch on a weekly. Beautiful run from, this was about 5 up to 15. So that's a 300% gain. And these short positions, I think, are inherited from the daily. Oh, that's showing what those are like. So on the 65-minute chart, I kind of like this consolidation. So the breakout is possible. I don't disagree with a wider stop of, that looks like about 60 cents to take advantage of that rising PSAR and give you a wider move. That's also the daily low. So I like that. I like this one, the breakout above the RL30. That's not really a technical indicator we use, but it's also a breakout above the weekly high. So it's clear that it's going. And then a third, I don't know if I would just wait. I'd put the one good position there and then a breakout above Z2. In fact, if there's anything, I'd instead of waiting for 1528, I would just go ahead with 1509 and put 2 on it and be done with it and let it go. This thing does have sharp corrections, so you do have to monitor that initial day trading position. This is the candidate where if it starts working out on a day trade, so I would go drill down here to the 1 or the 5-minute charts and try to make money on a early morning move, and then simply use that to keep 1/5 for the overnight position if it really closed well. So I like Cliff's. This is a place, though, in terms of the MACD rollover, this is also a place where we wouldn't be surprised if it starts to fail. And I like waiting to see a breakdown below 1520 before you start getting short. I wouldn't try to get short on an hourly chart in here. I could see that on a tactical day trade, but in terms of swing trading, I don't think I would on an hourly chart. Next up, PBW. PBW is showing some topping action here on a weekly basis, but it's been the strongest sector by far. On the daily, it's rolled over a little bit here. It also took 10 days for it to get out of this and make the next run up. It also took 10 days from here and a little rebound and run up. So that's kind of what we're seeing here. With New Year money that's trying to rotate into the strongest sectors from last year, I think that wouldn't be surprising. So like annual rebalancing, there's kind of two ways that happens. In the money manager world, what you really see is rebalancing to the weak performers. It looks for weakness and it skims. So in any stack, if you had a stack of performers like this, like these were the best and these were the worst, and these in the middle were just kind of normal. Standard portfolio rebalancing takes the excess gains from the superstars and rolls down and buys these when they are at cyclic lows, with the idea being that eventually you're going to be right, and then those things will revert to the mean of performance. And so you're buying a lot of shares when they're cheap with the excess gains. And when the leading sectors roll back, you've missed the sell-off, and you have bought the weakness with a lot of shares, and just the return to normal is double plus good. So it's a modified form of dollar cost averaging plus reversion to the mean. So that's one way to do it, is to harvest excess gains and then reward or repurchase the out of favor value plays. That's a cyclic value play. A momentum play would be where you say, no, what I want to do is I'm going to believe that the herd is going to take a look at who the annual superstars are, and then they're going to want to try to add more juice to them to hope that they can get on the momentum before it completely disappears. That's not unusual psychological behavior, is to chase winners. Happens all the time, no matter how often people are told not to do it by other people who make money on cycling to value plays. So I don't have an opinion other than frame your trade and then trade your frame. But the momentum players are trying to reward superstars, which is why people chase things like Bitcoin, Tesla, and clean energy. So PBW, by far and away the strongest sector, with a compelling story of, hey, green energy and lots of reasons. There's lots of reasons to think that there's more room to go in green energy. I mean, some of Tesla's strength is the claim that it's a green energy company, which is more or less true. So PBW at the start of this year could be on the receiving end of more money from annual rebalancing, and could continue its strong gains. And that's sort of the upside. So what I'm noticing here would be something like this same support level around 100 supported a 10% move to 110. Now it's got to get through 110 to really be persuasive that maybe this new money coming in is really pushing it higher. But with if this level here holds at 102 and with entry at 103, you're risking $3, and you've got $5. It's not quite 2 to 1, but once this thing starts moving, that would be a reasonable first guess. Then I would watch this carefully at 110. If it starts showing resistance, I would pocket my tactical trade. And that's why I like trading it not just on 65 minutes, but on the 1 and the 5. It's volatile, has enough volume, I should say, and liquidity that you can short-term trade it as well. But then if it breaks through 110, that's really where I'm looking to add it as a swing trade, because that will have broken out of a clear multi-day resistance, and then up it goes. And then if it gets above 112, then it's clear on a weekly basis that this thing is ready to go. So I like PBW as a way to integrate weekly, daily, and hourly with hybrid trading. And it's a long-term, it's a member of my long-term portfolio because of this, where we got entries around the 25 and 30 price range earlier this year, last year, I should say. And so we've got a lot of markets money and cushion on this thing and free shares, so I'll never sell those. So I'm always looking for ways to reinforce when the daily and the hourly charts are showing critical states, and that's what I see in PBW right now. So, frame your trade and trade your frame. Here is finance. See if we can see what's going on here. All right, so here's the weekly, and it has made the first weekly move with a very strong close out of a 6-week consolidation zone after a long, strong move. Say, oh, the status quo ante is back in place. This is the Biden bump. That, oh, it's going to be the normal grafting corruption, and it's all going to continue. So that's the Biden bump. And that was he didn't say anything stupid in 6 weeks to jeopardize the return to the previous status quo. So who's going to win under the previous status quo? Banks and big pharma. So that's what this is. And this is the resumption of that trade. And this is the argument for CATA 2 on hourly charts. Note the higher lows are continuing, and it closed very strongly. So any sign of strength out of here, and you're just on board the big bank train. And then here's this looks like, yeah, this is the daily chart. So it's strong on the hourly. That's as strong as it can be. And the daily close going into a long weekend, that's a bunch of people that wanted to be positioned for gain. So I would watch this one carefully. And then, FAS and FAZ, that's the 3x long, and then this is the 3x short ETF. So there's additional ways to play this with extra juice. If you like just trading the sector, like if you don't want to choose between JP Morgan and let's remember what Bank of America is. BA is Boeing, but anyway, Morgan and Goldman Sachs. If you don't know which one to pick from, you could either trade it with XLF or you could go for the leverage one, and they are very, very liquid. That's one I think the option guys should be slobbering over with momentum. All right, here's one on Amgen. I'm not really an Amgen follower, so I'm going to try to just interpret the charts using our standard practice. And this is what I do when somebody gives me a recommendation for something that's not already inside my herd. So what I do is I take if this is the big market, I take a series of samples to build my much smaller sampled universe from, where the Excel series and some of the individual companies that I like. And then I look for broad trends, but I look for an operationally useful subset of things that I can manage. So when somebody says, hey, Ken, what do you think about this idea? X, or whatever it may be, not US still, but any new idea, this is sort of the approach that I would take, is first see what's happening on a weekly. So big sell-off, big recovery. big sell-off, 2 scoops of a gain, so that's good. One leg down, rolled over. Oh, so this can get you 1 and 2 scoops quite easily. This on a weekly basis, 5 weeks of a very tight compression. It's getting ready to reverse the PSAR here. When the PSAR reverses, it's going to be right there at 225. So we're really only talking about $6, call it $5. Oh yeah, that's what it is, $5 on 230. So 10%, 1%. So that's about a 2% compression. And you can see that, that's the width of the dragon. So when it moves, you can easily see, even with a $5 stop, this thing will give you plenty of room. So an entry at 229 on the daily, or 230, let's call it. And he's looking for a stop at 228. So that's a $2 stop. The wider stop would be $5, which would be down here at the belly of the dragon. So if the $2 was too close for you, you might just use a $5 stop instead. The $2 stop is justified here on the 65-minute or hourly breakout. So if you get a breakout here, yeah, you would think that it would stay above the hump of the dragon. So that's why a $2 stop on an intraday trade is legit. So let's say that I was trading with $400 of risk capital. A $2 intraday stop might get me 200 shares. And then if this thing really closed well, like say above 230, 232, above 232, which would be this, I might want to keep 1/5 of that as a swing trade. And so now I'm using maybe I'm using a $5 stop, and now I'm only going to keep 80 shares out of the 200 for the overnight risk. So that's not quite 1/5, that's actually 2/5. But I think that would be legit. So start with 200 intraday and then keep 80 overnight, or that same kind of ratio. I could see that, because if it gets above 230, 233, now you see the top of the dragon, and the fair value is 238. So there's quite a lot of room to the upside to justify the swing. And then 238 only gets it to the weekly Bollinger Band mean, and then the far side of the river gets it at 248. So there's reasons to believe this thing can get to the top of the dragon on the weekly. So I would start this again with the hourly, and if it keeps working, keep a piece and widen the stop, and then maybe start managing it on a longer term basis, and hopefully grow the position on a weekly chart. So I like that one. Amgen looks legit. The short side trade, a breakdown here could get it to 224. I would be interested, I think, in shorting the edge of the dragon and playing to the far side, because this thing is so choppy that failure here could get it to 220 pretty easily. So I would frame this one in both directions, and I think 228 would be my trigger. I would try to play that and add a second position at 226 on this break. And then my target would be down in here at 224. And I'd add a third position there. Here is Simon Property Group. I kind of like this one too. We're using the same standard markups, hourly, daily, and weekly. Really strong move out of the consolidation zone. That was the same move that it made here and sold off. So this feels like a natural limit around 95. So any breakout above fair value is fresh and clear and going. This is the Biden trade. And a willingness of the Fed. This is also the Fed trade who said they're going to keep printing bonds. And what I think is happening here is that the Fed selling bonds is allowing banks to buy up small and medium commercial real estate, which is Simon Property Group. And so now suddenly those properties are still going to have value, and you're already seeing that money being out there changing ownership hands with free Fed money. That's the Fed trade to me. And the fact that this is starting this next leg up, higher high and a higher close and stable posture right here at 85, I love that trade. And then a break, and it pays a dividend. Not yet. It depends on how much they're going to continue to pay, but that's ready to go. And it breaks above 96, and it's gone. And you're getting a chance to buy this around 86 on the daily, and a break of the PSAR at 87, break of the Dragon at 90 and a half, the RL10 at 92. So that's a really nice trade frame, and I think you could add, halfway up here. This is where I would add. And I'd like to have 4 positions on that thing if it broke above this. And yeah, that's a nice trade with about a $2 stop. That's legit. I mean, I could even see the execution here being at the belly of the Dragon here. So you're only risking $1.50. And then a failure here. Short at 82. Oh. Yeah, because that's below here. Yeah, I think you want to be short there, because now the next target is the middle of this support level. So that gets you to 78. So that's a $4. So if you had $1.50 risk on this and you were aiming for 4 on the short side, that's almost 3 to 1. And then if this breaks at 75, you're good to go. So that's a pretty good critical state right there. I like it. Follow the price. This is New Core Steel. Yeah, so we're seeing a couple frames in here that are useful. So this is visual box trading at its best. So here is a clear, it's fully satiated. If this is a great big boa constrictor and it ate all the way up, this is where it's digesting. So that is a really comfortable fair value price. And while the big anaconda was sleepy, they sold it off sharply back down to this level. But it didn't fail further. And now we got a nice tight frame ready to take 1, 2, and 3 before the real heavy debate says, all right, how is this going to break out any further? I don't know, but there's a tactical opportunity to get 3 to 1 reward to risk just on a test of the beginning of this yellow zone. You can imagine that all the people that were buying down here were looking to capture this move back to here. And people who bought here might want to sell if it gets back here because they got their money back, whatever that means. So that looks like 3 tactical opportunities of gain for a very measured risk. And if that breaks, if 51 breaks, then the PSAR breaks on a weekly basis. And now you can see it's going to go down to, 48. And this is at the end of a really strong run. And a long-term fair value is back around 48. So that's a legit short opportunity that starts with a short at 52 and a half. If this thing works, I would study 55.50 carefully. If it starts rolling over, I'm all out. But if it breaks through, then all of a sudden we're out of this zone and back into this zone where now it can move to normally just 57.50 because it's in that band. And then if it broke out above this, this is really where I'm thinking about it as a long-term weekly, because it's got to get above this price level here, above 56, to be a serious long-term hold position. Right. So I would play this one clearly in 3 stages, with the hourly, then the daily, and it would have to prove to me that I want to hold it longer term. I love it as a short-term tactical. Longer term position, I want to be persuaded with money in hand from gains that are already made. McDonald's. So the hourly has found support here each time. It has made nice moves out of this zone, and it's already made some good gains. We looked at, those of you that were day trading with us saw between 20 and 40 R on those two moves. You can see the replay of those already. In that move. And so this would be a continuation play above the hump of the RL10, far side of the river, PSAR flip around 219, and the RL10. So 219 is in range. That's $5, and you're looking for a risk down here of about 2. So that gives you 2.5 to 1 on the daily. That's fine. Yeah, you've already cleared this hump, so that looks like it can go. And then you love this. It had a nice, beautiful long run. Here was the last support level. It ran up to here, digested its way down to here, held above the Bollinger Band mean, and is getting ready to resume. So yeah, 215, 220, 225, 230. These are like $5 stair steps, and you're getting like a $2 risk over here and a $1 risk over here. So you have potentially $20 if this thing really follows through. And then if it gets above 230, McDonald's is back. I mean, don't you want to own McDonald's? I do. Moneymaker. They'll be the last restaurant to fail until we go to Amazon hamburgers. In fact, that's probably next purchase for Bezos. They're buying McDonald's as we speak. NIO, this is the electric car company. This is the Tesla of China, from 4 to 48, so that's 1,200%. Consolidation at 40, or support at 40, and feeling good. Here's a COTA 2 entry right here. So this is a continuation on the daily. Yeah, and getting back to this price level, legit. Not much of a sell-off. So I'd be willing to buy it, I think, at 49 instead of waiting for 49.50 and just take the tighter risk. And then, yeah, reinforce above the RL10. That's on a 30-minute chart. Yeah, I like NIO. Just that's a nice intraday trade. Once it starts working, it goes. And the overnight session and the pre-morning session in Asia looks strong. So that's one that can really go. The Chinese government's going to buy that forever, so they have to. I think that was a no-brainer. And that's everything. That's when it was WDC, and I've already covered that. So that's everything I wanted to cover for tonight, guys. We'll get this posted in the usual spot. The other weekend videos are already up and posted on Patreon, so they're available for you to look at. So thanks for your kind attention and patience, and let's get after it into the new year. Let's remember focus, alignment, and resilience are going to be the watchwords for this year. Okay? Take good care.